What is up, boys and girls, ladies and gentlemen, day traders, cloud swing traders? Hope you guys are doing absolutely fantastic. Hope you guys are feeling good. Hope you guys are hanging in. Hope you guys had a parachute yesterday, but woo, things are changing. We got Albert House. Good morning to you. Good morning to Anna. Good morning to Andy. Andy, a different Andy. We got Bill. Good morning to Brad, Frank, Georgia in the house. Jenny. Good morning to you. GWJ. We got Jeremy. Good morning to Lauren, Lucian, Marius, Martino, Rob, William. You guys are piling in. BEA, beautiful. All my people out in YouTube land. Good morning to Jeff. All my lurkers in that background are just not going to say anything. I get it. I get it. It's okay. Hit that like and subscribe button, but. We got a lot to talk about today. We finally got the breakout. Here's the weekly chart of the SPY. So in relative like size and all that stuff, okay, we're still kind of hanging out. We do have a little bit of a gap up today, but uh I was definitely expecting a little pretty much no reaction. I thought Powell would come in, do his 25-point rate cut. That happened. I thought we would get dovish Jerome Powell out there saying all the right things that the market kind of loves, and we just hang out essentially in this range. For the most part, I was right. He came out, he did the rate cut. He was putting the same positive spin he would put on every other speech. There was a big difference, huge difference. Yeah, he did cut quarter point as expected. There was a big difference though. hmm Something changed. Something changed. Two things changed. One is the same speech of we have dual mandate, we do jobs, we do rate cut, yada yada yada. The market kind of loves it usually. Everything is kind of in line. He was saying the same thing, but the market wasn't believing him. The other big thing is, and probably why they weren't believing this one as opposed to the other ones, is he was talking about the next rate cut or lack of. So essentially, and he paired it with inflation as well, right? So he's they're saying that the Fed is definitely keeping an eye on inflation. They're kind of seeing a little bit of spike. It's too soon to say, but he was talking about uh pausing the rate cut for January, and then just on the dot plot that came in, the market was expecting three rate cuts for next year. Now they're down to two. So a little less if everybody was kind of running up on, hey, we're getting lower rates and the markets are loving it. And all those interest sensitive stocks that were kind of moving prior, everything was just getting killed. Because the next thing, I've already seen some people start talking about it. I think it's too soon, but there's conversation now of maybe rate hikes. That is actually happening. So we're going from an environment prior to Jerome Powell speaking yesterday of, all right, we probably get three rate cuts next year to what happens after we pause? What if inflation actually starts to spike further? He did bring up tariffs. He's like, we don't know. We don't know if that's going to add some more inflation to it. It definitely could. And if that inflation starts to spike again, we actually might be talking rate cuts next year or rate hikes next year as opposed to even further cuts. So yeah, after you hit the pause, the next one after that is, well, do we pause again? Are we back to rate cutting? Are we gonna start hiking rates? Where's the inflation? We have PCE coming out tomorrow. That I don't know if you guys were here a couple months ago. So I know some of you guys have been here for years, but a couple months ago we were watching CPI reports like crazy. We were watching PCE like crazy. Um, that's all back on the table, right? If we start seeing those spikes, the market's gonna hate it, and then we're gonna see those deeper pullbacks. So the narrative did change a little bit yesterday. Massive, massive sell-off. Obviously, markets were at all-time highs. We were also in a very long, drawn-out consolidation, almost 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. You could probably go back 13, 14, 15. Yesterday was 16 until we finally broke. But yeah, that the Albert says end of a honeymoon. Yeah, I agree. I for now, it again, it's too soon to say, but we have he was pretty much saying they were almost thinking no rate cut today or yesterday. They ended up going through with it, but they're saying yeah, no rate cut for January, and then we kind of go from there. I don't, and not only that, but I don't think that's a good positive message for like I don't know if that's going to be a well accepted message from Trump. So now you might have a little animosity going forward between the Fed and the White House. We'll see what happens on that end. Lucian says, I'm not sure why reducing further cuts is a shock. Less work he does means things are getting to where he needs. I agree. Yep. Shouldn't results be more important to the steps to get there? Um, yeah, yes and no. And I said this back when we did the 50-point rate hike. I actually don't think the hard landing was ever off the table. I know everybody was going all crazy, right? Everyone was like, "Yeah, okay, no landing, soft landing." I was like, I don't know how this plays out. I was like, I think it takes some time to run through the economy. I think we need a few other things to happen, but I'm like, somewhere in March we could see that kind of inflation spike. The bigger problem with doing the way he did it of those aggressive rate cuts, he takes a lot of tools out of the tool belt. Because now you have the most aggressive rate cut we've ever seen, followed by signaling and some further rate cuts that we've seen already, but signaling that we are still cutting rates as the markets are at all-time highs. And the jobs are supposedly pretty good. So why wouldn't you leave the like if inflation is not at its target, why would you start cutting? Right? You start taking some of the tools out of your tool belt, and that's essentially why he's trying to pause it now. If he comes in with a pause now, even if he goes a couple quarters, he's not it's not completely back to where the rates were prior. But at the same time, if tariffs come in and now we see a spike of inflation or whatever else happens that we start to boost the inflation, the CPI starts coming in higher, he now has the ability to kind of push those rates, market kind of like it a little bit, stabilize it a little further. But um, yeah, I don't know. I think he put himself into an interesting spot. But there's the daily, very, very weak close. We are getting a little gap up into the 100 for today. Um, the stock market crackheads buy every dip possible. So the end of today is actually going to be a really important day to see if any of this holds. Like where today closes is going to be very important, I think, for just feeling out how we're still going to be moving. I think we kind of broke the downtrend. Let me just double check. Where's this? Kind of. Well, there was our first uptrends. Let me see if we can make a move here. Let's see a little bit of a longer term uptrends. Yeah, that's significantly broken down. We we've been past the 20 EMA a couple times. We've been through the 100 a few times or the 50 a few times. Only once recently, this is back in August, did we actually break the 100 and then we maintained that 200 pretty much for a while. So we are starting to get some closes below some of those key moving averages. Not again, not a big deal. If today closes, probably inside day. We'll punt until tomorrow, and we'll see if this any of these rallies start to hold. But that was I would assume coming in with that massive drop that you're probably getting some kind of buy the dippers coming in. People are like, oh, things are on sale. They could be on sale. I don't know. We'll see. But I personally I think the narrative kind of changed. I would be cautious on buying here. I did close out a bunch of positions yesterday. As soon as he started talking about the rates pausing and inflation be coming back on the table as some kind of a worry again. Any trades that I was in bullish, anything that was not long term, I started cutting. I was just like, nah, get that's good for me. So um yeah, that's kind of how either small losses, small wins on positions and or decent some of them. Close out SoFi. I got no SoFi left. That was a good winner, but not like not loving where we're at. So we'll see. Uh, for today, obviously, I think the low of today would be a huge indicator. Might be just a little rest day. We'll see. But we have good support somewhere around 585.52, which is slightly below today's lows. We might have even hit that after hours. We'll see. We got to roughly 582.93. What did we just say? 582. Yep. So we kind of actually even broke all that 582.93, and we kind of ran into this support down here. So um, yeah, I think we're actually in a really really awkward spot right now for day trading purpose. If the dip buyers come in, we have a lot of room. If we ring that opening bell today and all of those people immediately start to just sell off that did not get out yesterday, that's going to be very interesting. So we'll see. I'm going to close my swing this morning on Microsoft. Yeah, I saw Microsoft too. That had a massive candle. If I don't see any downward pressure, your swing is to the long side or to the higher side? To the long side. Yeah. Again, you did have a close right at slightly below that last little support. I guess you have one more that's kind of sitting at 436.67. So here's the thing too is, and I think Microsoft longer, even as a trade basis, but longer term for sure. I think the Nvidias, maybe the Teslas. Tesla might get a little affected by some of the interest rates just because you have people buying cars with loans. And if the interest rates are a little too high, that might actually hinder some of the business. But anything interest rate sensitive, I think still shows weakness, whether we just have massive drops or not. But I would look for anything that was running up on interest rates, with the expectation that they were going to continue to be lowered. If they're already up, those would be shorts. I think anything that isn't really interest rate sensitive, aka Microsoft, aka Nvidia, um, those guys, I think, obviously would benefit from interest lower rates, but it doesn't really affect them as much. So, like a Microsoft buy the dip, I don't mind. Nvidia, longer term, I think you're okay. I think we'll go with the 10-year spectrum on this one. I think in 10 years your price is probably higher. In a short run, with if the market is panicking, if the market does pull back, if we're not liking the new narrative, you'll probably see lower prices on both Microsoft and Nvidia. But on a longer term basis, I think you're still probably those still remain a little bit strong. So yeah, yeah, I agree. I'm still holding the long term. I'm not selling that. In fact, I'll DCA. My next deposit for it is next month, so we'll go from there. The Mag 7 could do very well on there. Yep. Hmm. Again, unless we see the only way we don't see the Mag 7, I think the only way we see the Mag 7 do poorly in the kind of updated environment, right? Because now, again, we actually had this conversation yesterday, right as I was about to leave. But when you're investing into something, and when you're buying something, you're looking for safety, or you're looking for stable. Let's go with that. You're looking for something stable. You want a stable company. So for the next 10 years, and you can throw some speculative in there too, but for the most part, your portfolio is stable. Companies growing that produce income in pretty much every environment. The Mag 7 fit all that. They're not interest rate sensitive. They actually were the first ones to pop out of the kind of original bear trend, and then we got to interest rates. All those other smaller companies started to move as well. The only way is if the fear really starts to grow and we see money flowing out of the market in general, as opposed to just moving sector to sector. Right. I think crypto might be in for a little bit of a tougher spot. Crypto is definitely a space where you want the interest-free money so that this way it doesn't cost you anything to borrow it. So now you're investing into more risky assets. to try to gain some bigger gains or exposure. So the Coinbases, the MSTRs, all those guys, I think have maybe they don't collapse, but I think it hinders them from a further move. The other thing too we got to look at is TLT. That one even today, at least before, maybe it's not. Yeah, that one is still gapping down. So the bond people are still telling us be careful. Be extremely careful. I don't think we took a look at the cues yet. All right, we got the cues again, just massive candle, which we're probably going to see everywhere. We did land into a little support. We closed the gap. There's a chance for the bulls to actually come out of this one and start breaking to all-time highs again. They have the opportunity. That's not an easy journey. I don't know. So we'll see if we get more of a pullback on this one. But again, where today closes, I think extremely important. If it's an inside day, we'll push it off. But otherwise, you are hitting, and I would really consider drawing some fibs on most of these things, just to get some kind of gauge. Let's do this actually. Let's draw a quick fib on the cues, where we started this move to where we ended. It's like that Facebook meme. This is how it started. This is how it ended. So yeah, we're sitting at 520.42. That's only a 23% retracement. If we could rally to 527.14, you might have some bears stepping in, and then I have a really good level 530. So we could actually, with that kind of move, we could actually push a little bit higher, a decent amount, $10 to the high side on the cues before the bears actually come on back in and go, okay, let's take some risk off. So you got some room on that, but yeah, you're not I guess it's a terrifying candle. I think it's a little tough to be extremely bullish right now, but you do have some risk reward to a bull side. So for day trading, maybe we'll beat those crackheads and just buy everything. MU, not a great day for them to report. Yeah, yes. As soon as that report started coming out, I was like, oh wait, hold on. It's almost 4 o'clock. We got MU reporting. That's not the day they want to. But their earnings weren't great. It wasn't fantastic whatsoever. It doesn't help that the sentiment across the rest of the market completely bearish as well. Leading into their report, if it was more positive of a day, you'd probably be up at like, I don't know, this 96, 97. But we were even saying 96 was expected move to the downside, and you're clobbering. So puts are getting paid on this one. That being said, I think we got down to like 80, what was it, 85, I think we got to after hours. So it was looking kind of terrible. Bulls did step in a little bit, or at least shorts started to cover a little bit. You do have some support here. I don't know where we're going to bounce to. If we do, probably today is not the day for a bounce. Again, I have no problem taking some bounces. It might be Tesla, it might be Nvidia, it might be some of those big guys. MU with the earnings, you're low. You're kind of low on the price, and that's the only kind of appealing thing. If you do get a full retest gap, you got some room, 97.66, but lots and lots of resistance in between that. Yeah, the VIX went nuts yesterday too. Oh, that's not it. VIX, there we go. Yeah, good pop. We were saying somewhere around this $13 range is usually when you start getting those rando spikes, but for right now, did pull back. Uh, Alfred says, will we consider that a break of structure? You're very close to it. Yeah, I would say on the SPY, I would, yeah. So here's a longer term one. I think we did break down. But with this type of candle, you'd have to expect like I wouldn't be quite bearish out of the gate for a day trade. I think pick your spots to kind of plan out ahead of time where you might think this market might fall apart, or a good spot for you to at least get some more protection. But we could take a bounce. We could do something like this, even back in the 600 range, and then all of a sudden now the SPY is looking like a big head and shoulders. The problem is if you do it today, first of all, you'd have to, I would assume, go pretty far out of the money because this move actually could take 2, 3, 4 days. And then everyone's like, "Oh, Christmas rally, we're back to 600." And then you get this move back down, right? And then all of a sudden your theta starts to deteriorate from puts and stuff like that. But this is what I would be looking for. So, if we get some kind of a bounce into that 600 range, I think I had like on a fib I drew earlier. I think we had like the 599s or something like that. But let's see. Yeah, I got $600.41 takes us to the 618 retracement from the absolute high to this current low. So yeah, I I, I would be on watch for some kind of inverted head and shoulders. I do think we probably get bought up a little bit more today. Maybe some of those shorts with this gap up, they're like, cool, I shorted SPY up here and I held overnight because I thought we were just panicking. Maybe we sold off. They're still able to lock some gains, sell some other shorts off the table. That would bring the market even higher on a retrace. Yep. Let's see. Tesla, how'd you hold up, Tessie? You makes me angry all the time. We had a good location for the short. We tried to day trade this one. I was like, man, if this thing wants to hold up somewhere around this 475 zone, that's on this gap down, bearish sentiment. That would be a great spot for me to come in. So I tried it, gave it a shot. I was like, I think at least targets we could get to 457.87, and then if we break through that, which we've already messed with, I think the next target is 429. It did exactly what I wanted this thing to do, except for one extra wick, creating all-time highs again. Because why would it not do that? So I did get stopped out, lost less than an hour, and then eventually it just ended up coming right back down. But that move alone, from at least the previous resistance, 475, all the way down to uh, we'll even call it 430. That's a massive move. The other thing too on this one, structure-wise, and again, Tesla, I would have some concern because they have a lot of money in their account, so they're not as interest sensitive. And we don't know. Oh, I guess we did. Yep, we closed here, small little wick here, and then we got a massive wick here. So definitely a little bit more of a reversal candle for right now. And again, we'll see what this week closes. But we do have a little three bar reversal, little doji, but a much higher wick to the higher side for right now. So we could have a little chop. This thing is moved a lot. There's already a lot of people profitable, but I do think Tesla, in terms of consumers, if the rates do go higher or even a pause longer, will affect some of these companies. But I'd be watching Tesla today, seeing if we could get some kind of a bounce into the first spot at least. 457.87. Now I think we stay inside today on this one, but 430 would be my next target. If you go slightly lower, maybe get into like this 424, possibly 420 range. To the downside, you are opening about halfway through your candle from yesterday. It's a massive move. Massive move. Not right timing. All right, let's see. I think we had a few others that came in. That was it. Oh, Plate, aka Palantir. This one's still an interesting one. Again, valuation, it's tough. This one, they don't need they're not as interest rate sensitive. Interesting enough, they have like $2 billion in the bank or something crazy. They have a lot of money sitting on the sideline, virtually no debt. Companies with no debt will do fairly well because you don't really have to borrow money. So I think this one can remain stubborn to the short side. Valuation is a little again tough, but I think they have an opportunity. They're tied in with AI, so they still have that kind of story. If Nvidia starts to run again, I wouldn't short this one, but you do have somewhere around 74.47 as some type of resistance, maybe a tad higher, 74.61. Targets to the high side if you're going long on this one. It is a gap and go. You are essentially right where you opened yesterday. So if we could break through, I'd say my next target takes me to 76.51. Otherwise, decent spot for some shorts to come in, and then support levels 73.01. So I think this one just hangs out today. I don't expect a massive move on Palantir. A 0.25 drop should help sales of Tesla. The current drop should, yeah. But if I'm investing today, we've already got that it's gonna still take some time to kind of work through the system. But we technically have that quarter point cut already. Going forward, we know that January, he's already implying that we're not getting a cut. And again, the problem is if inflation starts to increase, number one, if inflation it becomes a problem again, guess what happens to the price of Tesla? Those Cybertrucks and every other car starts to go higher. So now you got that higher price where if somebody is still like, man, as well, let's talk about food. Food goes up too. You start getting an increase in food, other products, other supplies you need. You're going to be focusing on that section as opposed to can I get a new Tesla car, right? So the price of the car goes up higher. If it's not there yet, but there's signs that it could, and that's what the Fed is kind of worried about. But now you have that inflation go up. Then the Fed will have to also talk about increasing rates, which again, not yet, but it's something that could come down the line. So now you got a higher interest rate plus a higher cost car. That could be trouble for sales on Tesla. Not today, but this is the uncertainty of like, well, what if inflation does come back? What if instead of pausing and then we continue lowering, if this inflation gets out of hand, instead of the two cuts, we might have to go for a raise, right? And that's I think the biggest issue with something like Tesla. That's the biggest issue of why the market just went complete panic mode yesterday. Bitcoin, let's take a look at Bitcoin. I'm getting straight yelled at by Raya. Is that Bitcoin? Monopoly. For right now, it's just hanging out. Yeah, first resistance on this one. Again, good bounce off that 20. Not bad. Still got Michael Saylor. He's gonna buy at every level, he said. I don't care if it's $1 million. I'll just buy. Okay. Uh, right now, lower or this is still. Let's forget about today's candle because it's open, so we have one. But uh, this is the candle that we have. This would be a red base going back a few days on this one, and then you got this movement. So technically, we do have an inverse hammer right now. This one, who knows? I don't know, but I think what I would be concerned is if this move here is just a retracement of that down move, and then you get the pressure. Higher interest rates not going to be great for Bitcoin or crypto in general. Bitcoin's a little different of a beast because that's the main one, but we'll see. The main level on this one I want to break out is 104,400. You got one more retest all the way back to 106,790. But watch if this is just all buying off this 20, 50% retracement, 618, and then I would say if today's current lows start breaking out, watch Bitcoin, see if that one wants to hold. But right now it's holding. We're still in this holding period. We're not freaking out yet, although the market will tell me different. Other than that, that is the morning bell. So everybody on YouTube land, make sure you guys hit that like and subscribe button. You guys are